You know a tax bill is going to be interesting when they name it the One Big Beautiful Bill Act. Sounds like fireworks show? Well, it passed on 4th of July, 2025, so maybe that was intentional. But don't let the name fool you. This bill is less sizzle and more strategy. I'm Phil, and here's what investors, retirees, and business owners should actually pay attention to. Let's start with the big headline. Tax brackets are no longer on a ticking clock. The OBBBA makes the individual tax cuts from the 2017 Tax Cuts and Jobs Act permanent. That means we finally have some long-term clarity. What does this mean for you? Well, for retirees in training, it's now easier to plan out your retirement income and withdrawals knowing where tax rates are headed. For the higher earners, this opens up Roth conversion strategies in low-income years. It's like choosing when to pay your tax bill, just legally. Next, deductions and credits get a few upgrades. The standard deduction now goes to $15,750 for individuals or $31,500 for married couples, indexed for inflation. Child tax credit, that bumps up to $2,200 per kid, but it's not all sunshine. Mortgage interest deductions are still limited, and some energy credits are going away after 2025. Temporary perks, though, through 2029 include no tax on tips, up to $25,000, or overtime, up to $12,500. Car loan interest deductions, but only on U.S. assembled new vehicles. We have higher state and local tax deduction caps, and an extra $6,000 deduction if you're over 65 years old. Now is time to rethink charitable giving strategies and consider timing big expenses like a new car or home upgrades while the incentives last. Good news for anyone thinking about legacy planning. The estate and gift tax exclusion is rising big time. Starting in 2026, it's $15 million per person or $30 million per couple. The valuable step up in basis, still have it. Why it matters? If you were planning around the old $7 million limit, this opens up the door for more strategic gifting, trust work, and tax efficient transfers to heirs. Business owners, the OBBBA has some perks for you too. The 20% qualified business income QBI deduction is now permanent. Section 1202 got a boost, meaning bigger capital gains exclusions when selling qualified small business stock starting in year 3 of ownership. What does that mean? How you structure your business could save you big on taxes. It's worth revisiting that setup. Finally, opportunity zones are making a comeback in 2027, bigger and broader. New rural zones, including a 30% step up after 5 years. Like before, they offer tax deferral and possible tax-free growth. Heads up though, these are long-term plays. If you're considering them, make sure they fit your overall investment strategy, not just your tax plan. The One Big Beautiful Bill Act isn't just a tax tweak. It's a toolbox, and which tools you use depends entirely on your financial goals. Next step, let's review your tax strategy, investment plan, and estate documents together. We'll help you take advantage of the good stuff and sidestep the gotchas. Call us at 215-348-3176 or shoot us an email to schedule your OBBBA strategy session. We promise we'll make it more fun than it sounds.